Good morning, everybody. It's Friday, October 1st. Just going to run through a bunch of charts here and kind of recap on what happened yesterday. Anyways, yesterday we saw gold run up and then made a new high, and we saw a pretty good pull off sell off here. It's pretty much a broad market sell off. Equities and precious metals, they sold down fairly sharply all together, but they did rebound and then flatline for the rest of the day. This morning we're seeing gold pretty much follow yesterday morning's early price action, and it's made a new high right here, similar to what it did the other day. And I wouldn't be surprised if we see a move back down to the 1305 or 13 area today, and it'll most likely get bought back up. It is a Friday, so it's going to be a lighter volume day, although yesterday was a pretty big, quite a shake-up yesterday. That I think is going to spark some interest, so there will be a little more volume this Friday, I think, than others, as a lot of people are anticipating a big breakout in either direction. So if we take a quick look at the daily chart of gold, you can see here we've broken out of this rising wedge, and it continues to, this move looks a little long in the teeth, continues to grind its way up. We had a couple long wicks here, nothing huge, but if we take a look at the 60-minute chart, you can see we've got some pretty good selling volume yesterday. It was a pretty strong move down with the rest of the market, indicating that the moves are starting to get a little long in the teeth, and the S&P and gold, and it looks like it's starting to want to top more. We're getting these larger spikes here of selling, so it's starting to look like it's wanting to top, but of course gold's in a very strong uptrend. Every dip continues to be bought, and so there's no point in trying to short it here. Now if we take a quick look at the SP 500, yesterday was a pretty big day for it. If we take a look during regular trading hours here for the SPY fund, you can see we had a this rising wedge, which I pointed out here. And yesterday I put our stops in because there was a good possibility that there was going to be a really big move up yesterday, so I want to at least minimize our damage if it did continue just to break out and run really big. Unfortunately, I gave lots of wiggle room. Unfortunately, it still triggered our stops only by a few cents really, and then reversed back down. Overall, the pattern is still holding. It's still within this rising wedge. It hasn't broken down, hasn't broken to the upside. It is showing that there are a lot of sellers up here, and usually when you get a gap up and a big spike up and a sell down, it's usually a sign of exhaustion. It's the last wave of people, very similar to what happened back here in June, and very similar to what happened over here. You get a move up and a pause, and then more or less the market falls off. But right now it's still within its wedge, and it's deciding which way it wants to go. In overnight trading, if I pull up, let me just pull up the futures here. In overnight trading, we're seeing a move up this morning. The market just doesn't want to drop at all. Every time there is some big selling in the market, we see the US dollar just for some reason, just the bottom drops out of it and it slides lower, which naturally lifts equities. So it just seems like somebody's really trying to hold the market up. But again, overall the market is still trading within the futures chart. Actually shows more or less an upward kind of channel here compared to regular trading hours, and usually an upward channel is somewhat bearish, and we're getting these large whipsaws. We'll just have to see what plays out. Within regular trading hours, it's still trading within its range, and it hasn't really made a big move yet. But yesterday there was some pretty serious volume traded, and I think we might see some action today or next week for sure, with a clear definitive move up or down. So I'm going to keep my eye on that. If we take a quick look at the internals there that we saw Thursday, the market internals traded, they were way down here. There was an extreme level of people bullish on the market, which is one of the reasons why I pointed out that Friday we'll probably see a bit of a pop, and then we'll see some selling action. Anyways, that's what we saw on Friday. This was kind of one of the signals. Everybody was bullish on the market, and that was going to get everybody to buy in the morning, and the prices most likely gap up and then sell down. So this is kind of was an early warning that was going to happen. Now if I pull up this is the put call ratio, so everybody's buying calls. Now here we have the NYSE advanced decline line, and this didn't give us a signal till the market opened. It was showing that the market, once it opened at 9 o'clock in the morning right here, 9:30, the market was overbought, and it was kind of giving a sell signal there. But of course, if we had a huge rally up, this can continue to float up there for the entire day. So it's not that this just spikes up and you can short it. Really, I was hoping that our stops weren't going to get triggered. I did put them at a pretty good extreme level. Unfortunately, the market came up, just grabbed it, and then reversed. But anyways, this market internal was pointing to that the market was overbought first thing in the morning. And if we take a look at this here, the red spike indicator on the bottom, this indicates complete panic buying. It means everybody is buying. The majority of people are buying shares and not selling. And this here usually coincides with market tops or pauses. Anyway, so we had three sell signals yesterday. Unfortunately, we got this price whip. It went right up, spiked us out with a candle, and then it reversed back down. But overall, the market is still trading within this large wedge, and there's lots more opportunity. We should hopefully get a setup. Once the breakout happens, we'll probably play the retest of it. If it breaks to the upside, we'll most likely play a retest of the breakout level, or if it pulls back down. And if it breaks to the downside, we'll be looking to play the retest of the breakdown. It'll usually, if it does break down, it'll most likely come back into this area, and then we can short it and play the downside. So that's what I'm looking at there, and that's it for now. Talk to you later. Bye bye.